Are you tired of seeing opportunities in the market but missing out on profits time and time again? If capturing the big moves has become more luck than a strategy, then you're not alone. Today, I'm going to share with you a simple scalping strategy that could change everything. Using just 3 indicators, you'd be alerted to high probability setups you can capitalize on over and over. The beauty of this strategy is that it strips away all the uncertainty. You'll simply watch for when the 3 indicators align and give you a confirmed signal. And then you take the trade with a predefined risk-to-reward ratio. In just a few minutes, I'll show you exactly how the indicators work, what to look for to spot the signals, and a proven approach for managing your trades. So, if you're ready to finally start capturing the big moves that have been passing you by, so let's add the first indicator named Coral Trend Indicator Pin V4. The indicator will give us signals, but before using it in the strategy, we should adjust the settings to improve the results. So go back to the indicator settings and under inputs, set the constant D to 0. Next, follow the steps under the Style tab. Now the indicator gives 2 types of signals, buy and sell signals, where you can take long and short positions. But sometimes the indicator gives bad signals that we should filter out to improve our win rate. To do this, head back to the indicator section and search for Supertrend any indicator and add it to your trading strategy. Then make these following changes on the indicator settings. Under the Inputs tab, change the indicator to RSI and change the indicator length to 21. And then change the Supertrend ATR length to 14. In the Style section, no adjustments are needed, so leave the parameters in the default mode. By adding this indicator to your chart, similar signal and the Supertrend any indicator are needed to confirm signals. So, because in this example Supertrend indicator showed the sell signal, those buy signals were rightly rejected in this downtrend. But now we need to add the specialized indicator called market bias. After adding it, head over to its settings and under inputs, change the period to 145. Smoothing to 45. And the oscillator period to 7. Then in the Style tab, disable Hike and Smooth It and alter the color of the plot's background like I did. Now, with these tweaks, the market bias indicator will help identify market momentum. So when the momentum turns down, the indicator changes to red and the candles form below it. And if the momentum turns up, the indicator color shifts to green with candles above it. This way, we can enter trades that follow momentum and the market trend. Another swell feature is that we can also spot sideways markets. This occurs when candles falls within the colored bands of the market bias indicator, meaning the market lacks a clear trend, and we label this the no trade zone. Alright guys, time to put all this together and define our trade entry rules. For sell entries, we first need a sell signal from the CTI indicator. Then the price has to be under the red market bias indicator. Finally, the Supertrend any indicator needs to give the same sell signal as the CTI indicator. If all three agree, we can take a short position. After getting in, we should set a stop loss, for which I recommend using the market bias band. And to lock in profits and exit the trade, aim for a 1 to 1.5 risk to reward ratio. And here's how to enter buy trades based on these indicators. First, we want to buy signal from the CTI indicator. Price also needs to be above the green market bias indicator, showing upside momentum. Then the Supertrend any indicator should give a matching buy signal. If all three confirm with buy signals, we can enter a long position. After going long, we'll set a stop loss using the market bias band. And to secure profits and get out, aim for at least 1 to 1.5 risk to reward ratio. And ultimately, if you're hoping to trade using the same strategy I do, you absolutely cannot miss this video.